Hello dears, I hope that you are doing well. Today we are going to talk about the direct costing theory. If you remember what we had taken about the full absorption theory in the last video of Zoom meeting, do you remember that the concept of the full absorption theory? If you remember, we talked about that the full absorption theory. The concept of this theory is to collect all costs, whether variable or fixed one. So you solved your assignment according to this concept. Today we are going to take the other theory, which is the direct costing theory. And this theory is different from the full absorption theory because according to this theory, we are going to separate the variable costs from the fixed ones. So let me start about the same example that we had taken in the last Zoom video. Just a moment. Yes. If you remember, this is our solved example that we had taken in the last meeting. We had that there is direct materials for 28.5, direct labor 16.2, factory overhead variable and fixed amount 4.3 and 8.4. Units produced 10,000 units, beginning work in process 2 equivalent units, and ending work in process 120 equivalent units, beginning finished goods inventory 900 units, ending finished goods 1,200 units sold 9,700 units. Selling price per unit was 120. Selling and administrative expenses, we have a variable ones and fixed ones. Variable equal 20,000 and fixed equal 90,000. And the first requirement was about the preparing the cost of goods produced schedule and income statement under the absorption and direct costing theories. So we had taken the full absorption theory, and we are collecting all costs, whether variable or fixed one. Today, we are going to talk about, or we are going to learn about the direct costing theory and how to calculate costs using this theory, and what is the difference between the two theories. Okay, so let us start with the cost of goods produced schedule, but under the direct costing theory. Yes. To prepare the cost of goods produced schedule under the direct costing theory, we need to go through the same steps of the full absorption theory, as we need to add all costs we have except for the fixed ones. So we need to calculate the direct material cost, which is 28.5 multiplied by the units produced. Why the units produced, not the units sold? Because here simply we are going to calculate the cost of goods produced schedule. So I didn't need the cost of goods sold now. There is no need for the cost of goods sold now. So here we just calculate the cost of goods produced. We need to add direct material to direct labor to get our prime cost, and then to add the variable factory overhead, not the total factory overhead like what we had taken in the last theory. Okay, so this is the first difference between the two theories. I will calculate direct material as we had taken, which is 28.5 times units produced, direct labor, which is 16.2 times units produced, to get the prime cost, which is 447,000. Okay, then we need to add the factory overhead. Actually, we need here to add the variable one, because according to this theory, we are going to separate the fixed costs from the variable ones because we are needing to, or there is a need to calculate the variable costs at first. Okay, so here we just need to add the variable factory overhead. If you remember that the factory overhead, which is had the variable amount, was equal 4.3. 4.3 times units produced also to get the variable factory overhead. Then if you try to add direct material plus direct labor plus the variable factory overhead, you will get the total production cost. Okay, as it is. Then we have to add the beginning working process and deducting the ending working process as we had taken last lecture. But now we have to add the variable amount of each one, the variable beginning working process and the variable ending working process. Okay, how to calculate the variable beginning and the variable ending? I should add all costs except for the fixed one. Oh, I don't remember. So I will go back to our solve example to know what is the difference. Actually here I have direct material 28.5, direct labor 16.2, factory overhead we have variable and fixed one. So when I'm going to calculate the beginning working process and ending working process, I didn't need this fixed amount. There is no need for this fixed amount because we are now under the direct costing theory, because we need to separate this amount from our calculations. So we need to add 28.5 plus 16.2 plus 4.3 to get the amount that will be multiplied with the amount of beginning working process and ending working process amounts. So here, to go back to our solution, it will be like that. The variable beginning working process will be 49 times the equivalent units of working process, or beginning working process. And then we need to subtract the ending working process, which is 49 times 120, okay? And this is for reaching the aim of calculating the variable cost of goods produced. Actually, we need the variable one. So here we solve the first requirement, or a bit of first requirement, which is the cost of goods produced schedule under the direct costing. We add direct material with direct labor to get prime cost, and then add variable factory overhead to get the total production cost, and then adding the variable beginning working process, deducting the variable ending working process to get the variable cost of goods produced. Okay, now what we are going to do with this amount? What is the need for this amount? I need the amount of the variable cost of goods produced to be added to the beginning variable finished goods and subtracted from the ending variable finished goods to get the cost of goods sold, or the variable cost of goods sold actually. Okay, why we are going to calculate the variable cost of goods sold? Because we need to get our net profit from using this theory. So I need to subtract a cost of goods sold, or the variable cost of goods sold from sales to get my net profit at the end, because all of that happened to determine what's your net income in your company, what's your net income after calculating all of these. Okay, so here our second aim is to calculate the variable cost of goods sold. Sales should be we should deduct the variable cost of goods sold from sales. Okay, what is sales? Sales, if you go back to the example, you get the units sold, which is 9,700, times the selling price per unit, which is 120. This amount of sales, we will deduct from it the variable cost of goods sold. Okay, how to get it? How to get the variable cost of goods sold? To get the variable cost of goods sold, I should go back to my variable cost of goods produced. To add on this, the beginning or the variable beginning finished goods inventory, which is was or which that we had taken, that was 900 times 49. Why times 49? Because we subtract the fixed amount of fixed overhead, okay, from our calculations. We separate this amount. So to calculate the variable beginning finished goods inventory, we need to get the equivalent units of beginning finished goods times 49. Okay, and then to add it with the variable cost of goods produced, which we had calculated before, which is this amount. Okay, if I add the variable cost of goods produced to the variable beginning finished goods, I will get something called the variable cost of goods available for sale. This is the amount that it will be available for me to sell it for users or for customers, for clients. Okay, dears? Then I need to subtract the variable ending finished goods inventory, which has equivalent units of 1,200 times 49. Okay? If I do so, I will get the variable cost of goods sold. Okay, here this is the second difference between the two theories. Before subtracting fixed amounts or before subtracting the fixed selling and administrative expenses, we need to add the variable selling and administrative expense. So if you remember, when we are solving the full absorption theory, according to full absorption theory, we calculate the beginning finished goods with the goods goods produced, cost of goods produced, and then subtract the finished goods, the ending of finished goods inventory. Okay, to get our gross profit before subtracting any other expenses or any other expenses that we have in our company or in our organization. But the difference here is that we are going to separate the variable costs from the fixed ones. So before subtracting the other costs, we need to take from them the variable amounts. According to this, variable cost of goods sold should be added to the variable selling and administrative expenses, because selling and administrative expenses have also its variable amount. We need this amount to calculate according to this theory. Okay, after adding the variable selling and administrative expenses to the variable cost of goods sold, I will get the total variable costs, and this is my aim according to this theory, because this aim will help me to subtract the total variable costs from my sales to get my contribution margin. Contribution margin, not gross profit like the full absorption theory. And there is a difference between contribution margin and gross profit. Because here, the difference is that we subtract the variable selling and administrative expenses from our consideration, from our calculations. We take it to add it to the variable cost of goods sold, not to do like the other theory or the full absorption theory. So we get our contribution margin. We also need to get our net income. So according to that, we will subtract other fixed amounts. What are fixed amounts? If you go back to the example, you will get that we have here a fixed amount of selling and administrative expenses should be subtracted from our contribution margin. And also do not forget the fixed or total amount of the factory overhead, which is already given for you. Actually here, when we subtract the selling or the fixed amount of selling and administrative expenses and fixed amount of factory overhead from our contribution margin, this will help us to get what we call our net income. So here, and according to the two theories, we have two theories to calculate our costs. First one, which is what we had taken in the last Zoom video, which is the full absorption theory. And the second one, what we are going today, or what we say today, which is the direct costing theory. And we know the difference between them. Actually, the difference, or simply the difference, is how to separate your variable costs from the fixed ones, and then calculate all your fixed costs at the end, and subtract it from contribution margin to get the net income. Okay, what are the second requirements? Let me go back to the example here. He told me that the first requirement is to prepare cost of goods produced schedule and income statement under absorption and direct costing, and that we had solved, or we had done it. We are finished this in the last Zoom video and the beginning of this video. Okay. The second requirement is to analyze the difference between net incomes in the two methods. Oh dears, here there's a difference between two net incomes. When you calculate your costs according to the direct costing theory and according to the full absorption theory, you will note that there is a difference between the net income. Okay, well, why is this difference? Pardon. Okay, why this difference happen? Here, under the absorption costing, the net income equal this number, 492,628. Okay, if you know that the net income here under our direct costing theory is just 490,780, which is smaller than the net income of the full absorption theory. Okay, why did this difference happen? To analyze the difference between net incomes in the two methods, we need to type one more time the net income under the absorption costing, and then to get the net income under the direct costing to get the difference. Okay, the difference amount, if you subtract the two numbers from each others, you will get 1,848. Okay, we need to analyze this difference, or why this difference happened. This difference happened appeared in front of us due to the inventory. Why due to the inventory? Because any difference that may happen in our production depends on our inventory. Okay, and what is our inventory here in our example? Our inventory here is about the beginning work in process and ending work in process. Okay, we have another participant here, Marina. Okay, today, or at that moment, we are doing the second requirement, which is the difference that happened due to the inventory for the net income differences between the full absorption theory and the direct costing theory. And we found that the beginning work in process was 200 equivalent units. The ending work in process was 120 units. So if you know that there is a decrease happened here for the balance of work in process, there is a decrease from 200 units to 120. So this decrease amount in inventory will equal 80. Okay. Then I had to do the same actually for the balance of the finished goods. We have beginning finished goods that was given for us 900 units, and then we have ending units, which is 1,200. If you know that there is an increased amount, or there is ups in the finished goods units, this increase equal 300. Okay, now in our inventory, we have something decreases and something increases. Okay, what is our balance? What is the change in inventory happen? we should take our increasing amount and subtracting from it our decreasing amount. So 300 minus 80 to get 220. Okay, years. Now we need to know why the difference happened between the net income under the full absorption theory and the net income under the direct costing theory. Because if you know that there is a difference and the net income under direct costing theory is smaller than the net income under the absorption costing theory. Why this difference happened? Because the change that happened in the inventory. What the change that happened in the inventory? Something decreased and something increased. So we need to calculate the change. That change here is equal 220 units. Okay, this 220 units should be multiplied by 8.4. Why it should be multiplied by 8.4? Let me go back to the example, our solving examples, to show you our givens. Here, if you know that your fixed amount of factory overhead is 8.4. Actually, this amount, the amount which caused differences between the two theories, because under full absorption theory, we get this amount into our consideration, okay? But under the direct costing theory, we separate this amount. So here, to calculate the change in inventory, we need to get the equivalent units of a change in inventory and multiply by the amount of fixed overhead per unit. So here, 220 should be multiplied to 8.4. If you multiply this, you will get the difference that happened in the net income under the two theories. Okay, this is the second requirement. What about the third one? What about the last one? If we go back to the example and our requirements, required number 1, we have finished. Required number 2, we also have finished. What about the third one? To show the part of inventory items in the balance sheet. How can I show the part of inventory in the balance sheet? What is the balance sheet? What do we mean by balance sheet? We do all of that to know the difference or the change that will happen in our balance sheet. How to show the difference in our balance sheet? If you remember, balance sheet is considered like assets but should be equal liabilities plus owner's equity. Okay, what will happen here? The liabilities will be changed? I don't think so. Owner's equity also, I don't think so. What item will be changed in the income statement? Actually, it will be the assets. Why it will be the assets? Because inventory is considered as our assets. And any difference happened in the inventory or the ending inventory should be shown in our balance sheet. Because if you remember, the balance sheet must be done or must be shown at the end of December for our year. So must show your ending position, your like a screenshot for your ending position or for your financial assets or your for assets, for assets, liabilities, and owner's equity. We have to show this, or ending balances should be shown in our balance sheet, okay? To know what happened for assets. Okay, so to show the part of inventory items in the balance sheet, we need to put the ending balances under the current assets. Okay, what here is considered like current assets, which we will take it in our consideration in the next year. These ending balances will be beginning balances in the next year. So we don't have anything other than the work in process and finished goods. These are our inventories. So we need to take the ending balances of work in process and ending balances of finished goods inventory. How to take it or how to appear it in the balance sheet? Okay, I will get the equivalent units for each one, the equivalent units for the work in process inventory and the equivalent units for finished goods inventory. Okay, these are the units. What about the amount? How can I calculate the amount of this ending working process and this ending finished? If you go back to your example, you will get that the ending balance or the ending equivalence work in process is 120. Okay, and here the change or the ending balance of finished goods is also 1200. So I will take these equivalent units to be multiplied with the whole costs of our units. What is our whole costs of the units? I don't get it. Actually, we need to go back to our example to get costs. We have direct material 28.5, direct labor 16.2, variable and fixed overhead 4.3 and 8.4. Okay, if you calculate all of them and make it times the equivalent units of any work in process and any finished goods inventory, you will get your current assets or your amounts that will appear in your balance sheet regarding these amounts. Okay, dears? So simply, we are finished the 3 requirements. Now I'd like to ask Michael. Sorry, yes, Michael. Do you hear me? Can you hear me? Okay.
Hi.
Hi Mike, how are you?
تمام الحمد لله.
تمام الحمد لله بنتكلم عربي.
ربنا يخليك.
طيب قول لي انا يعني انا شرحت كل اللي فات انجلش بصراحه عشان if there is or if there are any Nigerian students need to understand this
مفيش حد
video.
موجود غير انا وانت اصلا ودكتور كريم اساسا.
ما هو الفيديو هينزل على الموقع صح كده؟ فاي حد تاني ممكن يشوفه. فالنيجيريان او اي حد مش فاضي النهارده لان النهارده اخر يوم للاسف في الاي ليرنينج، فطبعا مش هتلاقي الاقبال شديد يعني خلاص كلنا تعبنا. اوكي
تمام ماشي.
بس هو عشان كده كده هينزل فكان لازم نلتزم بالفورماتنج والانجلش والحاجات دي كلها. تمام
اوكي.
طيب فدلوقتي انا عاوزه اعرف اذا كان عندك مشكله في اذا كان عندك مشكله في التو ثيريز ولا لا.
لا تمام عادي.
تمام عادي، لو عندك اي سؤال اسال عادي.
لا تمام. وانا كنت بس عايز اساله هو حوارات الجامعه دلوقتي هتمشي ازاي؟ يعني ايه اللي هيحصل المفروض؟
لا بص بعدين بقى علشان هي المحاضرة اوريدي متسجلة بعد إذنك
خلاص اوكي. انا سوري انا اسف.
بعد الميتنج.
خلاص تمام.
المحاضرة طبعا كنت دخلت متأخر فالمحاضرة هتسمعها تاني من أول وجديد
تمام
عشان تفهم البروبلم ان دي تكملة للجزء اللي انا شرحته المرة اللي فاتت اللي هي الفول ابزوربشن. طبعا هي المسألة طبعا تو سيريز بيتكلم عن التو سيريز افتر موديفيكيشن اللي هي بعد التعديل. ان حضرتك لو تفتكر ان حضرتك اللي هي السيريز اوف كوست اكاونتنج احنا شرحنا اي اكسبلين باي تو سيريز الدايركت اند اندايركت والفاريبل اند فيكسد كوست ثيوري. دي حضرتك التو سيريز دول اللي هم افتر موديفيكيشنز اللي انا شرحته المره اللي فاتت اللي هي الفول ابزوربشن كوستنج. والدكتور شروق النهارده استكملت بقيه البروبلم اللي هي الدايركت كوستنج ثيوري.
تمام اوكي.
تمام ففي خلي بالك في ميتنج كمان ربع ساعه ولا تلت ساعه في ميتنج تاني في another meeting دكتور شروق she will explain another chapter اللي هي الايفالويشن انفنتوري. فيا ريت حضرتك تكون موجود معانا.
تمام اوكي حاضر يا دكتور.
خلاص يا دكتوره شكرا وشكرا ليكي. ميرسي.
Okay, thank for you all. I hope that you understand well. Bye bye.
باي. يا نهار اسود، شكلي على كده الدنيا.